What's up, guys? Dr. Mo here, digital nomad physician at digitalnomadphysician.com. Welcome, March 2024. So that's a bright white van outside of my window. That's why I'm lit up so beautifully. A good question that I got from a great colleague is, what should I do about the business side of my medical practice? So my name is Mohammed Ashori, MD. I go by Dr. Mo. You can check me out at digitalnomadphysician.com. And I have a course on starting your own virtual medical practice, your own online practice. It's the best course out there. There's nothing like it. Nothing is as thorough and detailed. There's two versions of it. You can go to Nomad Physician. You can go to nomadphysician.com and check out the course. You can also go to my regular website, digitalnomadphysician.com/courses, and check that out. In that course, I talk about the business side of things, about the financial side of things, how to handle the business, the accounting, all of that stuff, the CPA type of stuff. So in this video, I'm going to briefly go over how to think about your business entity, you, and everything else. Okay, so you have living expenses, you have rent, a mortgage, bills, groceries, and everything else that you pay. And you obviously need to separate your business stuff from your personal stuff. That protects you against all sorts of lawsuits and stuff in the future. Why? Because if they sue my business, then as long as I did everything under the business umbrella, only that business gets affected. If you mix your personal with your business, even if you have an S Corp, an LLC, PLLC, or P Corp, or any other kind of structure, it's called piercing the corporate veil. It's called overlapping the boundaries, mixing the boundaries, whatever kind of terminology you want to use. If they see that from your business account, you've been paying all sorts of personal stuff, and then you're taking some of your personal money and transferring it into your business, and you're taking some of your business money, if you mess that up later on, especially for those of you who are making a lot of money, for those of us in my level, I'm definitely at the baby level, you're probably not going to have a whole lot of problems. But it's a good habit to learn. Now, if you have a sole proprietorship, it's a little bit easier, right? So taxes and all of that stuff is separate. So you don't have a corporation necessarily to worry about. But a good practice is to have a business checking and a personal checking, a business credit card and a personal credit card. If you have these separate entities, now when you transfer money from your business to your personal checking, you can set it up so it's that it basically is a paycheck. So it's a regular transfer, or is the profit that's left over at the end. And that is the money that you're transferring to yourself. But you don't want to have the patient's money coming in to your personal checking, because those two are going to mix, and that's going to create problems for you. And it's going to make it much harder for you to figure out taxes. If you pay for a service, for example, I pay for Kajabi for my digital nomad physician brand. It's my business stuff. It goes out of my business checking as opposed to my personal checking. So if I can do that all separately, at the end of the year, it's really easy, because there is one checking account where all the income comes in and all the expenses go out. So literally, if I just put that in a spreadsheet or use my bank accounts little thing, filter thing, then I know how much ins I had, how much outs I had. And it's very easy for me to calculate my profit margin and pay taxes on that. So that's probably the simplest thing. If you need to actually set up a transfer, you can do it sporadically, or you can do it regularly, meaning I give myself $1,000 every month from this business account to my checking account, especially if you have other sources of income coming in. Otherwise, good luck living on $1,000 a month. Or you're going to set up $5,000 a month out of your business into your checking on a regular basis. The thing to avoid here is to have your personal cell phone, your mortgage paid out of the business checking account. And if you do, it's fine. It's fine. You can fix that. You can transfer some of your money back into it from your personal, but it becomes really messy towards the end. Again, remember, when you're building your own practice, when you're building your own business, you're creating something that should stand up to scrutiny should shit hit the fan. But you're also creating something that hopefully has some future value. You not only want income from your business, you also want equity from your business. And a well-run business is going to have a well-run checking account. It's going to have really proper accounting that you can later have audited by somebody who wants to buy your business and then sell your business, make good money. That's the goal with any business that I create. I want it to have future equity. I don't want it to be something that's here now and it's not going to, it's going to be kind of messy. And then when I dissolve it, it's going to be all messy. So business checking, personal checking, business credit card, personal credit card, and you could take that to any extent that you want. Business car, personal car, business cell phone, personal cell phone, business monitor, business computer, personal computer. I've found that keeping all of that separate gives me a lot of peace of mind, and it's easier for me to run my business that way. You're going to have to figure out what works the best for you. So if you have any specific questions about how to structure that, you can leave a comment below and I'll answer it for you. If I left something out, I'd love to hear from you about that. Check out the descriptions below and some of the links I'm going to include, and go to digitalnomadphysician.com. Take care.